That's so funny. You call it a fan base. I wish it were a fan base. That would be amazing, right? I'd have people, selling this episode on the black market, lining up for tickets. They'd be going in the secondary market. I'd be Taylor Swift, but with no hair. That'd be incredible.
So you're not a Swiftie by any chance?
I got nothing wrong with Taylor Swift. I mean, she's a local. I'm in the Philadelphia area. She's from Reading. It's not far. Reading area, actually. So, but her inventory needs control. She definitely needs control. She doesn't think she has inventory, but she has inventory. And so we're talking about safety stock today. And safety stock, it's one of those things that'll only, manufacturing distribution nerds really understood for the longest time. But it came into the forefront for more people in business during the pandemic. And a new phrase came about. So just in time is an old phrase. And the phrase just in case came out, which is really safety stock. It's a new phrase for an old concept. And we all realized how just important that was. There were supply chain, fiascos and bottlenecks and all kinds of things, and stockouts, the dreaded stockout. And so it's still fresh in our mind. It's still as important as it ever was. So that's why I'm just thrilled to get into the topic, because it's never been more important. I have some unique experiences. You have way more than me. So let's jump right into it. So Warren, let's start with you. What is safety stock, and what's kind of the philosophy on it, if you will? Because it's an all or nothing affair in some people's minds.
Oh yeah, absolutely, and it's in most cases it's the biggest guess, because we talk to a lot of customers on a daily basis, big customers, small customers, and it's always this sort of thought-provoking moment when you ask somebody, so what does your safety stock look like, and how do you calculate that? And you get that nervous look around the room. Well, I don't know. How do you do it? How do you do it? So it's an interesting topic. I mean, it's been around for a long time. It's, kind of insurance. It's buffer. It's whatever you want to call it. But it's completely, misunderstood in most cases. And really when the world goes a bit wonky and there's a little bit higher, bigger waves than normal, then people start taking it very serious. When you got customers with money knocking on the door, and there ain't no goods.
And that impacts customer experience heavily. And that's really what it's about. And that's what people don't really understand. They think about it as inventory turns. I've got to get my inventory turns to be very, very high. I get it. That's money that's locked up that could otherwise be used to invest in more of the right resources at the right time. But when you stock out and there's a customer on the other end, that's bad mojo. You may lose that customer for life, because good news travels slowly. Fast news travels at the speed of light, literally on the internet in the 21st century. And that is crucial. Yeah. So, and Karen, what are some of the things that you've seen out there in terms of some of the things that customers have experienced over, I'll say heck with the pandemic, just over the entirety of your experience here?
Well, Chuck, I think that a lot of customers think that a cloud-based solution like Netstock is only designed for the big guys. And seriously, they think it's all for the Home Depots, the Lowe's, the Walmarts, and so forth. And they're thinking, hey, why can't I have something like that? I need to remain competitive. I have employees to pay. I've got valued customers that I want to make sure that they've got their orders fulfilled, and then so they come to Netstock and they say, well, wait a minute, wow, there's actually something for me. And so what a lot of folks don't know is that Netstock was designed originally and to this day for the small to mid-sized businesses. So I think that's probably the biggest shock for a lot of customers out there, and also a lot of partners. They say, I just don't know what I'm going to do to help my customer out, because we're looking at very expensive solutions, and they come to Netstock and they say, well, I'm glad I found out about you, because I've got lots of opportunity and lots of places where we can fix some problems and avoid some problems as well.
And this concept of safety stock is crucial for everyone. It really needs to be exercised. I think about all the really small businesses that are operating on QuickBooks, and they have to go offline. And if they adopt the safety stock program, they have to go offline and do it on spreadsheets and or guess. And I will tell you that I worked for a manufacturer, some people that I love and adore to this day, and I implemented a rudimentary safety stock. We came off on their new ERP. We came off of QuickBooks, and a lot of it came out of the owner's head. To his credit, this guy, Hank, you know who you are. This guy was amazing. The stuff that he could do from memory was spectacular. But I remember the day. I couldn't tell you the date, but I remember it like it was yesterday when he said, we really grew the business. And the depth and breadth of inventory became very deep and wide. And everyone's memory has a limit. And he's like, I just can't do it anymore. It used to be easy. And so the techniques are still the same. But when we implemented that program, it was kind of a weight off of his shoulders in a way. Because we threw some arithmetic into the balancing act of investing the cash in inventory. Now, this, to his credit, this was an inventory-heavy company because their business model absolutely demanded fast turnaround. And when the expected lead time for the end product is well within the expected lead time for the components, the only way to make up for that is inventory and safety stock. That's it. When they're about even, gets a lot easier. When your component time is a lot shorter than the expected lead time of the market, it's really easy. You can have lots of turns, no problem.
Exactly.
So
Absolutely.
but it becomes very, very complex. So we did a rudimentary plan that was multiples of lead time for the component to plan for it. Right? Is it the best? No. But a very basic ERP system coming off of QuickBooks. It's a great first step.
Right, and Chuck, to your point of spreadsheets, if you hear Warren in his demos, oftentimes a customer will come along and say, I'm using spreadsheets right now, and Warren will say something to the effect of, well, I don't want to discount your hard work in building that spreadsheet because you have put a lot of work into this, and it could be the heart and soul of your business at this point. But we have a different way, which is a cloud-based solution, and so Warren can certainly expand upon what customers do beyond spreadsheets, especially with Netstock. However, I just got back from a customer partner event, and most of the customers that came up to my table, my little booth that I had in the expo area, were all talking about the use of spreadsheets. And I said, well, how do I have a solution for you then?
Right.
And if you want to look at, cloud-based solutions, you're moving to the cloud, all of our other systems are moving to the cloud, then a spreadsheet just may not support that vision and that strategy within your organization. So I'd like to just ping it over to Warren here and have his comments in terms of what he's seen in the spreadsheet space, and also how it relates to safety stock and ensuring that the customer has the right balance of inventory to meet that demand.
No, sure. And I think, before we even get into that, I think the one thing that I always, share with a lot of people is that inventory is a damn hard thing to plan. And
yeah, it is.
so, it's not the easiest thing in the world. You got every single thing on a daily basis working against your plan. So it's the fact that you use multiple tools, or maybe rub a crystal ball, or have a bag of bones that you throw out on the boardroom table every morning. That's fine as long as it works, or if it works, that's great. So I want to definitely get that point across. The concept of safety stock is that it's buffer, it's insurance. So it's not intended to. It's not intended to really be there, but it is there because, as we all found in supply chains, as our customers drifted further and further away, and as our suppliers, further away, the more insurance we need to kind of hedge against those buffers. So that's the kind of the origin of that. That's what it is. The one thing that I always hear people, ask me is like, where should I pack my safety stock in the warehouse? People don't do that. People put it in one big pile, and they don't know if it's safety stock or normal stock. So it doesn't have a special place. It doesn't have a special shelf. It doesn't have bin location, purple or orange on. No, it's in the same pile of stuff. And the other thing with safety stock again is it's easy if you got a box of cigarettes in your top pocket and you make a note there for 2 or 3 products. It's a different kettle of fish when you got 150,000 products that go through seasonality. You got customers that buy online in a shop, get a delivery at home. It becomes a little bit more tricky than that. And I think to add to that, the whole point of Excel, I've seen some incredible things being done in Excel. It's one of my favorite tools. I mean, I've built some really cool multi-regressional models in it. It can do a lot of stuff, but it's disconnected. It's still manual. It's not gonna think, oh, hang on a second, this variable changed, therefore I should. It doesn't do that. And that's obviously why tools, it's going to do a lot better at that.
And Warren, I've been dying to tell the team this. This may be some late breaking news or new news for Netstock. Is at that show that I was just at, one of the customers came up to me and said, Karen, this is how we deal with safety stock. And so put your safety belt on. I know that you both are sitting here. So she said, my boss said, there's a certain amount of space on the shelf in the warehouse. Okay? Certain amount of space on that shelf. It needs to be filled at all times. When I walk into the warehouse, she said to the person that I was speaking to, that needs to be filled, and if it's not, then you're in trouble.
That's almost the same approach.
And I was thinking, oh my goodness.
Well, there's another.
Might not be the optimal way of dealing with it.
There's another safety stock out there that is well known by anybody who's run an operation, and that is the top drawer of the people out on the floor or the engineers.
Yes.
They know what the problems are, and they squirrel away parts. Oh, what happened to that? Oh, they were lost in production, and they squirrel them away.
Oh, yes.
And it's not in large quantity because the amount of space you had to fill in a desk drawer is a whole lot smaller.
Right.
But that is a real safety stock, and you want to know what really goes on the shop floor and distribution floor, you go ask the people that are out there. Well, you don't have enough extras. This is always a problem, so I keep a few so that I can save the day. Guess where I'm going to focus my continuous improvement efforts.
Yeah, and it's no. I'm not trying to say that that the manager was wrong or by any means disparage their approach. It's just that one thing that Netstock is really keen on is educating customers. We've got a lot of resources within our website. We've got a learning program available for our customers. And so we want to not only deliver a world-class solution, but we also want to deliver world-class expertise so that that small to mid-sized company that I was talking to you about before is as strong as it possibly can be. Because our success is not just getting customers and seeing what our balance looks like. Our success is also, those fully empowered, very strong customers that feel very confident that they've got the right amount of safety stock, and again, they've got that nice balance within their organizations.
Well, that's an amazing thing. I now imagine that story that you just shared, that little scenario of the person. This is how we manage our stock. Fill this space, right? Well, that person's still going to be in trouble if the wrong stuff is in that space.
Oh, yes.
Correct.
Right? The chances are they might work for the best leader in the world, and God bless them. That's amazing for them. But they're still expected for it to be right. And not everyone has the opportunity to study these topics like I did as an industrial engineer. Not everybody has lived and been able to implement this sort of more sophisticated planning for eventualities as I did and you have and many others have. Some companies are doing it for the first time. Some companies are expected to just pick it up. They hire people who are smart, who have the ability to go out and learn, not people who necessarily come in with the experience. Why? Because this is their experience, and this is what they pay. But we can pay for this.
Yeah.
So this comes down. And that's the reality. It's those companies that need to learn. Now, imagine that person has the resources from Netstock, and she can go out and she can learn it and bring it back. Well, this is the space, but this is what the mix needs to be. And by the way, this one's really a glaring problem. We need to look at having more space because this one alone is a problem. It's 80% of the sources of our stockouts are our issues, and we ran out of space. So once you have that knowledge, imagine how much more valuable to the company you could be. They hired you because of your aptitude. Go out and freaking learn it. Well, you provide the resources.
Right. And I think that also, when people feel empowered in their positions and when they feel like they've got more knowledge, there's more job satisfaction.
Of course.
And so if you kind of look at the supply chain world, there's so much information out there, and there are so many experts and think tanks and white papers and this and that. So the interesting thing about Netstock is we're able to deliver that information in kind of neat packages, and so you're not overwhelmed. So you need to do your day-to-day job, but you also want to feel like you're getting something more out of your position. And I think that we see that a lot in our customers, where they're happy. There's a smile on their face. They're excited about using the solution. They want to train more employees on how to use our solution. So, it's all this information that's distilled. It's nice and neat packages, and we can deliver that. And but really, the bottom line is, making sure that they're competitive, making sure that they retain customers, making sure that that there's also that equal conversation between the executives in terms of what their inventory strategy is, and also what the buyers and buyer and planners are thinking too. So yeah, there's a lot to unpack here.
Well, let's start unpacking it. So,
All right.
the at a rudimentary level, right? As Warren, you said, it's an insurance policy, right? But like those of us buying insurance, how much do you buy? Right.
Well,
It depends on your assets. It depends on something else, plus your risk tolerance and all the different things. Okay, so when we go out and we choose that insurance, we have big decisions to make, and they can be expensive. So let's dig a little deeper.
So, I mean, that's exactly the thing. And I think that the other dimension that also often gets misunderstood is that, also the time of where you are in your journey. If you're a new business, the insurance that you need is going to be fundamentally different to a big established business, and it's going to cost you more, cost you less. And I want to kind of come back to that point that you said earlier, Karen, you said about the person that's saying that this part of the shelf has to be filled. There's nothing wrong with that. If you can afford it, there's nothing wrong with that.
Yeah.
And we got a term at Netstock we often refer to as you get first in, first out, or first in, last out. We've got a concept that we call FISH, which is first in, still here. And that's often what happens with safety stock if it's not properly understood, is it becomes a boat anchor. Because what else can you do with it other than, well, not that you need to go and throw something in the ocean, but it's kind of a metaphor, is that it just becomes a pile of stuff. And it's an asset at the end of the day that doesn't give you a return. And that's often what happens with it. So, I mean, to get into it, the insurance inventory that we have is to hedge against the volatility of demand. That's the fundamental reason why we have it. We know that demand does all sort of stuff, and we want to kind of go and say, I want 10%, 20%, 30%, or that space on the shelf, whatever that might be. The thing that often happens is that it's a static number. Somebody will go and say it has to be 30 days. Now, the problem with that is that when you got 10 items and you got 30 days of safety stock, hey, you get a number. But 10 items never remain 10 items. We always, and maybe deviating off the point there, I'm yet to meet a company that doesn't want to grow year on year. Now, what does it mean? You're going to come back with 10, 10 becomes 20, 20 becomes 50, 50 becomes... Now, the problem is that you still got the 30-day for all of that. So you're painting all your products with the same brush or tarring it with the same brush. And before you know it, you got no working capital. You got a lot of stuff, but you got no money. And the reality of the world where we are, and especially in the United States, is our consumers are getting more and more selfish, demanding. They want the latest, greatest. I don't want 5 colors. I want 100 colors, and you need to give that to me. So the double-edged sword becomes that you tie up all of your money up into this insurance inventory, because it was something that you decided 5 years ago, and 5 years ago didn't know about a virus, and 5 years ago didn't know about ships getting stuck in the Suez Canal, and now you got to offload that stuff at a lower price than what you normally would have, and that's normally where the problem comes in. So. To make a long story short, what you need to consider is, again, your environment that you're in, as well as the risk factors that you're faced with. So if you've got a very volatile demand pattern, you've got a very unreliable supply side of things, well, use those components to dynamically calculate what your safety stock should be in relation to what you get as a return. I always tell people that last week's fast mover is going to be next week's obsolete item. And it's all about timing. Like Mozart said, it's all about timing. And if you're not on top of that, you're dead in the water.
Yeah, well, you want to hear God laugh, tell him your plan, right? So,
Absolutely.
because it's going to happen.
Yes.
And I can't help but when you talked about, first in, still here, my mind immediately goes to people like, oh, yeah, what do you do? Well, I work in a warehouse. I'm a planner. And, they're drawing fish in the sand, because, yeah, me too. It's like their little inside joke code.
Yes.
So, good Lord. So, but of course, the recurring theme in here is balance, right? So 30 days, I just laugh. 30 days for everything, yeah, except that the lead time is, 18 weeks. 30 days gets you, essentially you get zero.
It's normally 4 months to 6 months when that happens. So.
Yeah, exactly. It's like, but we want to simplify it. We absolutely want to simplify it in our little brains. And so, because compared to the big expensive calculator that is an ERP system and a Netstock solution, our brains are small and simple. We can only handle so much calculation capacity in a short period of time. But so we have to make it easy. 30 days. And well, it's going to take me too much time to plan. All right. Whoa. That's where that's where we start talking about ROI, right? That's where we talk about total cost of ownership, and we have to include the opportunity cost of ticked off customers and lost deals and all the fun stuff. So but what are some of in this balance, what are some of the different aspects of looking at this, right? So you have cash flow. Okay, that's the most well-known. We always think about safety stock and inventory terms turn to cash flow. But what are some of the other things that are going on out there that Nextstop helps them examine and evaluate?
Yeah, certainly. So I think the first one that's often misunderstood is the cost of holding. You got the cost of money, you got inflation, you got all of these things happening, but at the same time, taking the widgets in a pallet, in a box, in a tray, a cart, whatever you want to call it, and putting it on the shelf somewhere costs money. There's rent, there's forklifts, there's all these sort of things. So the very first thing that we help our customers identify is what is the actual cost of holding. Often that in the United States is anything from, it keeps varying, but it's about 18 to 25%, depending on where you are in the US, depending on the channels and things like that. But that's a lot of annual cost to hold this stuff. Now, again, when you start looking at safety stock and what should I put there, what are the typical return that you get on an item? And most of our customers get single-digit margins on that. So if you make 2% on an item, you turn it twice a year, you got 4% return, but your holding cost is sitting at 20%, and by the way, you got 3 years worth of stuff on the shelf. It's what I call the silent killer, because it's continuously eating from the bottom, and you're trying to add more things on the top there. So that's just probably one of the maybe the most sensitive and painful one to raise, but that's some of the things that we help you identify. Again, it's a high risk asset. You want to move these things, you want to make the money. I have not yet met anybody that derives some sort of fun out of buying, keeping inventory in a warehouse. It's not an easy thing to do. So they do this because we want to get financial gain. So that's probably the first thing that we identify. The second thing is trying to then benchmark yourself against what the industry averages would be. In apparel, we all know that a blue shirt that sits on a hanger is going to sit there for one season. So, okay, therefore we know it's 1 turn or 2 turns a year, whatever that might be. So you want to also then be able to identify or put yourself into a bucket to understand that I should be doing at least X amount of turns. And if I'm not doing that, this is not a good item for my assortment. Let's think about doing something else. So those would probably be the two that comes to mind, kind of off the cuff.
And when you talk about the blue shirt and the industry averages, this is a very glaring balance item to expound upon. The blue shirt. Let me think. I got to be careful not to mention the New York Giants. I'm a Philadelphia Eagles fan. Some other jersey. All right, some other blue jersey. I can't talk about the Cowboys either. We'll go with the Colts.
No.
All right, the Colts jersey.
Bills.
If the Colts are having an exceptionally good
Dodgers.
season this year, okay, the blue jerseys are going to skyrocket.
100%.
Okay, and you prepare for that. But if the short-sighted executive leader planner is basing it purely off of industry average for other blue jerseys, let's say because one of those teams is not doing as well this year, okay, but the average, demand for jerseys is this, but we're having a spectacular year and they're going to explode off the shelves and you haven't planned for it, well, you're just in trouble. And it's crazy how that could happen, right? I could literally put myself in the shoes of the person who's responsible for merchandise, say, planning my inventory for my jerseys based on our record of wins and losses, right? Well, isn't that exactly the same as every other business? It's based on wins and losses. It's just a different kind. It's actually sale of the items. But in this case, you've got a correlation, okay, and possibly even a causation. And that's the kind of thing that we need to feed back. And because the failure, in my mind, the failure is always traceable to the feedback loop.
100%.
Always. You fail first time, it's a bummer. Second failure, it's because somebody didn't tell somebody something. We're winning. Oh, I didn't think our sales would go up because we're winning so many football games. So, and that is very crucial to understanding. Is it's truly dynamic. Safety stock is not static. We're going to set it at 30 days forever.
No.
That's ridiculous.
Right.
Because everybody wants to grow, as you said.
Yeah, and you'll end up chasing your own shadow if you think it's static. And so the advice was study. But let's go one step further. I mean, so let's say that is a particular jersey that's blowing up. I mean, and I don't want to go too deep into this, but if you take a step back and you look at the supply chain, that jersey is a blank jersey, has no colors on it, has no nothing.
Right.
It's manufactured in a factory in the Philippines, hopefully in the right way with the right label and all of those lovely things. And then from there's some sort of signal that says, hey, make this one blue. And it has to be extra, extra large because, And then the journey starts, the 6 months or 5 months journey starts to really get there where the consumption will be required. And it's all of these things. That's what I'm saying. It's one of the hardest things in the world to do because you got to get this, you got to get this right. And that's often what I tell people is you get it almost right to exactly wrong because one little missed signal is going to mess the whole thing up. Let's take avian flu or bird flu. There's always this example that says you're stocking up the shelves with all this, pieces of chicken, and suddenly there's something in the news. Your demand's gone. People are not going to eat chicken for a very long time, but they're going to get the alternative. It's going to be, I don't know, salmon or tuna or whatever, and there goes that through the roof. Now suddenly you start stocking up, and the vicious cycles are on a rinse and repeat. And so I think most planners or most demand planners are probably they prematurely age because they have 4 heart attacks and a stroke every 2 weeks trying to figure out what's going to be the next thing.
And
Well,
Warren,
and they ought to take. Go ahead.
I was going to say, Warren, I was hoping you could explain to the folks, what happens when that blue shirt becomes out of style or it's replaced by something else. How do customers go ahead, or the buyers and the planners go ahead and plan for that replacement blue shirt? I think that's an important piece that folks should know about.
Absolutely. So there's really 2 components that happen there. There's the physical handling of the asset, and then there's the replacement, the kind of rinse and repeat program. So it's not going to be blue, it's going to be purple, it's going to be purple, it's going to be turquoise, whatever that goes. So from a planning perspective, the consumption data gets, if you've got something sophisticated to do this, gets plugged into next season's program or next season's, whatever that might be. And hopefully there's a chain that goes along, or it's a new product introduction or an NPI. And that kind of happens. That's the easy part, the planning side. The physical disposal of those items becomes a little bit more tricky. So 10 years ago when I started doing inventory in the United States, the whole liquidation business, liquidators, was a very sketchy sort of business model and with really sort of sketchy characters that really you're never sure where these things go. It's really kind of grown up. So what I'm certainly finding in the United States now is that there's a good way to offset these things. Because largely in the United States, you don't have a return logistics. Once it goes out, the same truck doesn't bring it back to dispose of it. It has to go somewhere. So from a physical disposal of the asset, it goes into liquidation. Often it goes to another market. So where I'm from in Africa, you might find that the blue shirts of a certain sport team, because they may be 6 months behind the rest of the world, suddenly there's a spike of demand there. So let's repurpose, let's rinse and repeat and capture a different audience to use that. So there's a number of ways in which it happens, but I will tell you, you need to handle it carefully because it's going to keep happening. It's like summer and winter. Every year it's going to come and it's going to go, and it's just whether your margin of error is smaller is going to make you the leader or the loser.
Right.
And that volatility is far greater the closer you are to the consumer.
Oh, absolutely.
Right. So you go back to the jersey, right? If I'm a supplier of white jerseys, I've got I know that one football team is going to have a good year.
Yes.
So I can plan for that. Okay. If I know that there's X number of teams whose base jersey is white and they sew on different colors to it, right? So it's easier. It's steadier for me. And by the way, if for some reason I run into a problem, I can likely sell that same white jersey not to the American football team, but I could sell it to somebody else for another sport. Okay, or something like that. I could do it for college football, or I could do it for high school football, or I could do it for, whatever. I'm thinking United States, but I could try and sell it to Canadian football. So that's certainly an issue. But once it reaches that highest level of value, that's where you see significant volatility. And who's the biggest? The biggest as a population, the ones that suffer? It's going to be the smaller businesses because they're the closest to the consumer.
100%.
And they're also the least likely to consider and their safety stock and do a good job at it.
Absolutely.
So they're the ones. So if there's anywhere where it's more poignant, we think this is the stuff of the big companies, as Karen said at the beginning. It's more important for the small companies because the magnitude of the impact can literally crush them.
Absolutely. I always tell people that there is very little difference between a small business and Home Depot. Yes, you can get complicated. You can say they got more categories and they got more flavors of bolts.
Sure.
Don't know when last any of you were in Home Depot, but it's a confusing and overwhelming place, but it's fun because there's just so much of it. But I often tell people there's very little difference other than a couple of zeros after the stock holding, the inventory value. They just got more zeros. And they maybe got a couple of more locations, but it's the same thing. They face the same problems as you as a small business, as you say.
And Karen, would you say that, in terms of the customers, do you see more of an issue with the big customers, or do you see a proportion of your clients coming from mid-market, small? What do you see?
Lately, it's all small to mid market, and it's that company that's owned by one woman, one guy, maybe partnerships. They're using a system like Dynamics GP or Business Central, and they love the system, they love their partner, they love what they're doing with it, but they just need that additional edge, and they need to make sure that there is that good insurance of safety stock. They want to make sure that they are becoming more competitive. Because I spoke with a nursery company this week that is competing against the Lowe's of the world, and they're holding their own, and folks are post pandemic they're still looking at how to improve the interiors and exteriors of their homes, but they want to be bigger and better and more efficient, and so that's why they essentially came up to my table at this show that I mentioned. So it's the small to mid-sized businesses that are flocking to a company like ours, looking for answers.
Well, and that's why I love that the product is approachable for them. Again, they need to be able to have a solution that's the right size for them. But truly, they need to have the solution. Someone put an idea in my head. Nowadays, with the relatively low price of Business Central licensing and Netstock licensing and the relatively low cost of implementation, it's making less and less sense to start your business on something like QuickBooks. And he introduced the phrase to me that it really makes sense at this point in the 21st century for small businesses to just skip the QuickBooks step.
Right.
So that you can come into this and enter it at some level of sophistication and try and avoid the problems. Again, we talked about in prep. Salespeople always say pain points. Well, maybe they're not in pain. Maybe they just want to be able to achieve more and they want to avoid problems in the future. And that's really what this can do. If you can do this early in your journey, then you can avoid and never be in pain.
Yeah, growth hacks, growth points.
Exactly.
Right.
I want to add something to that. Sorry, Kat, I want to add something before you lose that thought. There's nothing wrong with QuickBooks. It's a fantastic system.
Nothing wrong with it.
Solid.
It served a market and it was incredible. But if you look at a product like Shopify, so my wife's got an online store on Shopify. it's got really sophisticated inventory planning capability. It gives you a projection, it gives you safety stock, but again, it relies on you to tell it, I think it should be this. So I just wanted to add that point there. The world is changing, and a small business selling a couple of T-shirts printed with something funny on it does have an omni-channel. They got multiple points of consumption. They in actual fact have a global supply chain bigger than most sort of really big, Fortune 500 companies in the US, because that's just the way that the world is wired these days.
Right. So, when we talk about our ROI, as we did just now, I want the folks to know that are listening to this podcast to understand that I come from a small business family. And so, I've got actually literally, T-shirt and promotional products production. Another family member owns a bakery. And another family member owns one of those local stores where you buy your chainsaws and your snow blowers and so forth. And, I think that I have a little bit of an insight in terms of how small businesses run. And they are looking for that ROI. And so if they are going to invest into a cloud-based solution, they want to see something come out of it. So I can think of all my family members, what would they do with the extra money that they have because they don't have stockouts, because they don't have excess stock? They could hire a new employee. They could put an addition to their business. They could maybe invest in a new product to sell that will attract people into their businesses. So there's so many examples out there, and I think that's one of the reasons why I love Netstock is because we're able to provide that ROI, and then also when you're looking at it from a partner standpoint, a partner may say a customer needs to engage in a certain project. They may need to do something with their website. There are a myriad of projects that they could do. Well, if they're spending money on excess stock, or if they're losing customers because of stockouts, they're not able to access those funds to go ahead and engage in those projects with their partners. So that's another thing that a lot of folks do understand.
Yeah, and in the small and mid-sized businesses, they suffer from one very, very common trait, and that is the tendency to forget about or ignore opportunity cost.
All right.
Because it's foggy, it's nebulous, it's not real. And I have come across, I went to a trade show in June. I found six companies who are running a homegrown ERP system. Okay. One of whom, the companies, they designed it themselves. It's the general manager who's one, quote unquote, he likes computers. Okay.
Good.
But great. But imagine what that general manager could have done with that time. Now let's extrapolate that down to safety stock. Okay. Imagine what your planners can do, what your purchasing people can do, what your warehouse people can do, how fewer of these activities they can engage in. That way they can divert their time to something that is of higher value to the employees, the customers, and the stakeholders. And they completely forget about that opportunity cost. It's nebulous, therefore it's not real. But it has to be real. It simply has to be real.
Right, Chuck. Chuck, I love that point because a lot of these businesses were started by entrepreneurs, people with a vision. People thought that they could solve a problem or fill a niche or something to that effect. But when you're bogged down with these day-to-day laborious procedures and things that aren't reliable and things that are going to get in the way of your growth, then you've got some problems and you've got some issues that you need to work with. And so Netstock is not here to solve all the world's problems, but we can certainly empower that entrepreneur, empower the people that he or she may have hired, and make them better at their jobs, and again, like I said before, have that job satisfaction. And everybody wants job satisfaction, so it's not just having that balance. There's so many other factors that need to be considered.
I'm going to put a big exclamation point on your entrepreneurial point. So often I talk to a lot of entrepreneurs in my comings and goings every day, and they all start their business from something about which they're passionate.
Right.
Right. This is my passion. This is what I love. I love to build this. I'm a geek on this. I love to help people do this. I love to see the outcomes, et cetera, et cetera. I guarantee you that one of those passions is not arguing with your purchasing people and your vendors to try and pull in inventory.
That's
I
perfect.
guarantee it. And it sure as hell is not cracking the whip to make sure your people are counting and trying to find and locate inventory in your shop because you're hand to mouth and checking
Right.
those desk drawers those engineers and supervisors might have stuff squirreled away. I guarantee you that's not one of your passions.
Absolutely. And a lot of times when you do these sessions, and I'm going to be crucified for saying this, but you know they talk about, I didn't know that a sales and operations planning session is so hard, and you know, because now you're trying to balance all those things, and basically I always refer to it as the mechanism to manage the abusive relationships that you have internal, because people don't trust each other. So they don't know about that. And I think to Karen's point also, in actual fact to your point, Chuck, you know, they you know, spend more time making decisions on what's important for the business than playing around in data. Scrolling up and down in data is not fun. Well, maybe it's fun for some, but you want to get the insights. You want to extract the insights to then go and make a call on that and then grow on that. And that's often what they don't see.
And so, Warren, the other thing that I noticed too is that, okay, so you're an entrepreneur, you're building a business, you're going to have that insurance on your assets, on your property, and so forth, and then you know, we're talking about insurance in terms of the safety stock. Well, I can tell you that there are a lot of times when both partners and customers either call me or email me or come to my trade show booth or interact with me somehow with essentially their hair on fire because something dramatically has gone wrong. And yeah,
You're treading
and
into
so
dangerous territory.
and so I know. So I sorry about that, Chuck. We love you just the way you are. And so, you know, here's the insurance, you know, for your inventory, which is extremely expensive. And it's not to say that we're going to replace, you know, boxes of widgets or what have you, you know, if there's a fire or a flood or something to that effect.
Right,
But it's just that insurance to make sure that, you know, your business is ticking along the way that it should. And again, balance.
Oh, absolutely. And I think something to add also on top of that, I'm quite passionate about, you know, separating inventory management to inventory optimization, because again, management is setting that buffer. You know,
Correct.
deciding that I want insurance, I want to go and have insurance there. But over time, the optimization is making that cover less and less and less, because you understand more of your environment and what is really in your control and what is not in your control. So exactly that. You know, it's an ongoing, it's hard work, but it pays off in the long run.
Well, I'd like to, you know, tack on inventory management is purely an expense. Optimization is an investment.
There we go.
Right? It's the part of your continuous improvement program for the companies that are sophisticated enough to have a formal continuous improvement program.
Yes.
Right? Pure expense versus investment. And back to, if you're making an investment, the optimization provides an ROI. Now, if you're using a product like Netstock, if you can do it in near real time with multiple scenarios, like you've shown me, wow. I mean, it's literally lightning fast. And in the future, we're definitely going to take a look at the product. We'll get some demos up. We're going to show everybody a big, deeper dive. But really, until you understand the consequences, the concepts, and the fact of the insurance, you know, that's one thing. And the other thing about this, we've made the comparison to insurance, but it's more than insurance. Insurance on your business, it's important. And it's an expense, okay, that, you know, in theory, you have to have it. So you're not going to pay taxes, you know, on that piece of money. But this insurance has value. In theory, it's saleable. So this insurance has a greater value to your end. It's to your end customer. It's to the well-being of your company. It's the well-being of your family, frankly. And in the end, if things don't quite go the way you want, or you're nearing the end of your business, you know, you want to retire or sell it off or something, this particular insurance has saleable value. And so its level of value is actually somewhat greater than insurance in the classical sense. And that's it really can't be underscored enough. So,
Absolutely.
well, folks, I think that we have just thoroughly covered the concepts, the ups, the downs, the sideways, the benefits, the opportunities, and the consequences of safety stock. And I could not be more grateful. And honestly, I love the concept of fish. First in, still here. I've never heard it before. I'm definitely going to use it. I wish I had known about it because I would have drawn a fish in the sand for anybody else who was living my life back in the day. So, Karen, Warren, thank you so much. I love this conversation. I can't wait to see you again. Let's get it on the calendar because nothing is more important than helping these companies to grow and turn their big expensive calculator into something that really brings real increasing value to their life, their workflows, and their company. So thank you so much. And on behalf of Netstock and the Turnkey 365 team, thank you so much.
Thank you, Chuck. Thank you all.